Thank you very much. Thank you, KCM, for organizing this wonderful event. The topic for the panel discussion is how banks, NBFCs can collaborate with startups to create a strong, inclusive ecosystem. So this is a panel discussion for you, for the participants. Be more interactive. You can ask your questions. We are no more discussing whether banks and NBFCs should collaborate or why they should collaborate with startups. That time is over. Now we are thinking how strongly we can collaborate. That's the situation now. We are now discussing more about co-creation than collaboration. From competition to collaboration to co-creation. That's the stage we are now. And so that is why this session is very important. And for this session, we have 4 segments in the BFSI. We have one of the strongest regional rural bank. We have one of the strongest NBFC. We have a microfinance institution which turned to be, then later became a banking, small finance bank, and then became a scheduled bank. And we have payment bank also in this post-savings bank. So payment bank. So we have a group of different segments of representatives from the banking segment. It will be very interesting to know from each of them because they cater to the needs of different segments, different identity also, how Fintech can collaborate and strengthen the relationship. I look forward for an interesting panel discussion on this. May I introduce Mr. Jayaprakash C. He is chairman of Kerala Gramin Bank, one of the largest regional rural bank in India. He has served in different capacities in Canara Bank and grew up to the rank of general manager. He has around 26 years of service and he has worked across different parts of the country and different segments of banking and different types of lending also. And he is very keen to discuss further on this relationship. He was talking to me about it. He's looking forward for that because their segment is basically the village borrowers, agri borrowers, micro units, MSME units. And we have with us Mr. Nandakumar. And we are privileged to have with us today a leader who was profiled as one among the 40 of India's most valuable CEOs in a special issue of Business World magazine. It's a very privilege to have him here. Welcome, Mr. V.P. Nandakumar. He's a MD and CEO of Manappuram Finance Limited, a leading NBFC with 5,021 branches in 28 states and union territories, and he needs no introduction. And it is one of the leading non-banking institution, banking financial companies in the country. And besides Manappuram Finance, Mr. Nandakumar was involved as a promoter in Nikita Small Finance Bank and Aptus Value Housing Finance. With lots of experience, he can bring in lots of inputs into our discussion today. And we have again Mr. V. J. Venkatramu, MD and CEO of India Post Payment Bank, with over 25 years of work experience in various functions of banking, with core competency in the areas of business strategy, product development, and digital financial services, what we are looking for under this discussion. He was extremely involved in the financial inclusion space, leveraging Fintech and digital-led innovation to make a difference. Welcome to you, sir. Thank you for being with us today. And we have Mr. George K. John. Welcome, Mr. John. He is Senior Vice President, ISAF Small Finance Bank, having 3 decades of accomplishment and having experience in banking, finance, and development. And he was very instrumental in converting the microfinance institution into a small finance bank, and which is now going for its IPO. I think you're going for its IPO. Oh, good. We are all proud of you. And to look at the segment, you know very specific segments are there, where in the area which they are working at, the type of clients, the type of reach they have in the various villages in India. So it will be very interesting to know how they look forward, in which areas they want to grow this relationship, and what all things they are expecting the startup. Can I have Mr. Jayaprakash ji for this inaugural views on this?
Hi, good evening all. Before going to this, I just want to introduce my bank, the Kerala Grameen Bank, one of the first state level Grameen Bank. Even though we are in existence for 46 years, we become a single largest state level bank in 2013. And of course, when Mr. Ajayan introduced, you may be thinking that all of us who are sitting on this panel are catering to the same kind of customers. It is not like that. We cater to the different segment of the customers within the same niche of the area. We, Kerala Grameen Bank, having the expansion of more than 634 branches, entire Kerala state, we take care. We have a more than 9+ million customer base with us. And we lend to mainly to the small and marginal farmers, even though total agriculture we lend, but major sector is small and marginal farmers, micro entrepreneurs, and affordable housing. These are our major areas where we deal with, and these are our major customers. And naturally, you can understand when we deal with this kind of customers, our value per transaction is less, but volume is very huge. So naturally, if there is no technology and we are not utilizing the technology, it is very difficult to reach these customers. And today's the ecosystem of the fintechs, most of the fintechs, what is they are coming, so normally the foreign banks, then private sector banks, then top PSU banks, they are adapting this technology like anything, because the technology is coming with the cost. It is not that simply it is coming. It requires a lot of the cost. So definitely the banks like us, which are starved of the capital, and we have to do the banking at the lower level where profit margins are very less. The difficulty is in adopting technology is one of the things. Not only that I am adopting the technology, my customer also should adopt the technology. That is the biggest challenge when it comes to the things. So coming to our bank since 2013, we are on CBS platform. We are on one of the best platform of Pinnacle. We have every technological things available in all the big banks, maybe payments, maybe lending things and all, but still coming to the fintech, there are a lot of things are required to be done in the credit area. Of course, the liability side, we have a very good thing. We are already having a lot of payment apps and everything, mobile banking, internet, RTGS, you name anything, it is already there. But the major thing is the lacuna is in the credit area. Even biggest of the big banks are having the credit area, that is in retail lending or a personal loan segment only. Not it in SMEs or in agriculture, it is still a nascent stage. No good fintechs are available in agriculture lending itself. So that is the bank which is lending more in agriculture sector. That too, in fact, as per the RBI norm, we have to do only 10% of our lending to small and marginal farmer, but we have 55% of our lending to small and marginal farmer. So when we reach to these segment, the best technology and the technology which is easier to use it, and the customer understands it. That kind of want of technology is definitely wanting in this sector. So definitely we are looking in this area.
Thank you, Jayaprakash Ji, for the inputs. He was very clear and specific that the bank needs more support, especially from the fintech in the areas of agri-lending, credit. And it is interesting to know from a banker that he needs the fintechs to support him on this, because this is an opportunity where you can look into. And do you have any kind of vertical, as Federal Bank was telling, fintech vertical, or somebody with whom the fintechs can connect with solutions or interact in your office?
Definitely, we have a separate technology team itself. We have a very good technological team supported with that. So since we do uniquely with many kind of products, we have our own in-house team. We have our own loan management module systems we have developed. We have our own inspection modules we have developed. We have our own field visit modules what we have developed by own. So we have a separate technology department itself, which is looking after to the entire technological needs of the bank.
So any startups can contact them directly?
Yeah, definitely. Our department of technology is headed by none other than the general manager level person. Totally, it is a vertical coming under the general manager.
Okay.
So we have a IT wing separately. We have a digital banking wing separately. And we have a project management office at our database centers at Bangalore. So we have a very good established technological centers. Among the RRBs, we are one of the best technologically known RRB in India. So we have all these things and we are open for it. We are accessible to easily to anyone. And it is so important, you can understand the number one of the bank is sitting here.
Great.
This morning.
Thank you very much. That's a welcome signal to all the fintechs and very specific on the areas which they can focus and how they can connect with the one of the best rural bank with their solutions. Thank you very much for the input. We'll come forward. Again, when coming to NBFCs, NBFCs are playing very important role now. They are in all type of lendings and they are in not only in gold loan, MSMEs and various segments, and they are also playing very important role. Many of the fintechs are already tied up with many of the NBFCs and the lending at the scenario is totally, the canvas is also slightly getting changed because of these relationships. And another important aspect is that the area where in financial inclusion, these NBFCs can play a very important role with the support of fintechs. That's, I don't know, that, can you elaborate on that? Is a possibility, Mr. Nandakumar, or how you can collaborate in these areas? Or are you already doing some with startups or fintechs?
So thank you. At the outset, let me thank the organizers for inviting me for this session. Manappuram is the first gold loan company in the country, the first company to formalize these gold loans into a formal lending model. So we got listed in 1995. It took us so many years to become a $1 billion valued company. So now, overnight, we see some of the startups becoming unicorns. Post this pandemic alone, so many unicorns emerged, and we are very happy to know that India is the country where the maximum unicorns are. Something very, we should all be very much proud of. One data says only 8% of India's borrowers are borrowing from institutions like banks and NBFCs, formal institutions. Only about 58% of the households are availing banking services at all in this world. And only 5% of India's 6 lakhs villages have bank branches even today. So NBFCs, these are the last mile financiers. NBFCs are the last mile financiers. We have almost nearly 60 lakh live customers today, as of today. And we are connected across India through 5,000 plus branches. So this is the connect of a typical NBFC. So they have the connect, they have the reach, etc. And this is which earlier, decade back, when I to go to a bank, they used to consider NBFC as a competitor. Today, the mindset is totally changed. The competition has become collaboration in every areas. Even fintechs, well, at some point of time, bankers and NBFCs considered them as a competition. Now we are thinking about, yes, how our 10 million customer base can be used, can be accessed using fintech collaborating. Similarly, the question between banks and NBFCs, this is an area where every day we are thinking about collaboration through call and, yes. Now, different models, yes. Somebody who has the distribution capability, they source funds from various channels, including banks. They source the technology fintech from other means. Even technology, that may not be from, the technology is one thing, but using the best a platform to analyze the data. Yes, using artificial intelligence, we have a third platform. And modern technologies, in the digitalized world, we use another platform. So the model is slowly becoming that of an aggregator of this, all this. And distributing the services to the needy, to the last, who is the last mile. So many models like risk sharing models, etc., through co-lending models, through BC models, these have become very, very common today. So when we heard the previous panel discussions, I heard 80% of the discussions I couldn't understand. Metaverse, this thing, that thing, etc., etc. So this is where the world is. We can see, yes, the world is totally disruptive. What is that today, the strength of the system is the uncertainty. The weakness, this can be considered as a weakness also. But this can be the system, the strength of the system, and everybody is going to be in use. Today, yes, in 6 months' time, we hope the emergence of 5G in India. And what is going to be in another 6 months further? We are not, we have no idea about it. So, in an area where the reach out is very important, NBFCs play a very important role. And the NBFCs are considered as a very, very integral part of the monetary system of the country on two counts. One on the strength of distribution, second on the strength of collection. So, I think without involving NBFCs, the banks cannot extend the distribution to the last mile. Yes.
So that's a strong point where, very, very, very strong point where the fintechs can play a very important role. But let me, to understand further, other than that, how far, as you are further expanding and going to different areas, the fintechs that can support you in risk management, KYC areas and all, and more monitoring aspects also. Is it? Do you feel that there's a space for the startups there?
Yeah. So even the lending models are becoming different every day. One thing, yes, the e-KYC, everything, yes, very lending institution, large lending institutions have started using this. Now, few things that is emerging in the regulatory environments. One is the new microfinance regulatory regime. It is changed now. Earlier, so far, it was considered as a joint liability group model.
Okay.
Now, these small loans with the new regulations in place, yes, so everything is changed. Now, the small loans become big, loans of size of 5 lakhs also.
Yeah, yeah.
What is looked at now is only the family income where the cap is only 3 lakhs.
Okay.
So, from a joint liability model where the women were the borrowers, which was the practice, now it is going to be a micro SME model in many cases. And also the new opportunities which was announced, which was already announced by the Reserve Bank of India. Yes, the opportunities in credit card distribution, issuing credit cards, where the NBFCs are going to have a big role because of the last mile connectivity. So, with all these would be made, all these would be possible only through collaboration with the large banks.
Okay. Thank you very much. So, as the discussion goes, we get it's more refined. We get more avenues where the startups can work with these banks and NBFCs. And another important aspect is that, as we see the fintechs is not showing up, opening up the weakness of the banks, or it's not opening up the weakness of NBFCs. It is actually showing the pinpoints of the customers, pain points of the customers. When they show the pain points of the customers, you look for the solutions. Now, that's why everybody is looking up how to solve that pain point. That's why even Reserve Bank also has come out with regulatory sandbox cohorts, finding solutions for this. So there's a great avenue for fintech, and we have now with us Mr. Venkatramo, MD and CEO of India Post Payment Bank. Because sir, you have a very important role, because you have presence in all the villages. Because the role you can play in the rural economy, developing rural economy now with the payment bank also in place, it's going to be the last mile, going to be really the last mile where you can reach. And how do you feel the startups or fintechs can play a role in this? Other than that, you can also tell how the banks can generally look for this relationship to grow.
Thank you. So before that, I would like to touch upon the point that Mr. Nandakumar made about the role that NBFCs played through microfinance in terms of bringing down the average ticket size and formation of JLGs. So if you look at the microfinance average ticket size, that varies from 20 to 25,000. And what we observed in the segment that we deal with is it has to go down below that. So today, if I talk about the average ticket size of the loan that these kind of customers require, it could be less than 10,000 rupees. And that cannot happen without addressing the fundamentals of the lending business. So the fundamentals of the lending business is the cost of credit delivery to the last mile. That is very important. I think somewhere that is coming as a biggest roadblock in terms of reaching credit to the last mile. And we've seen the kind of costs that are involved in microfinance time and again. We keep talking about the kind of interest rates that are being carried out in microfinance industry, but most of that goes towards the operating costs, and that's the kind of cost of credit delivery. So coming to the point of delivering this particular low value credit, I think that is not possible without the intervention of technology, where you create some sort of an aggregated platform, and that can in turn be utilized to provide credit. And with the kind of distribution network that the India Post brings with 150,000 plus post offices, so almost you have one post office for every 3 to 4 villages. That's the kind of network that we have. We already have the network. We already have the people reaching to the doorstep. And more importantly, today with the help of technology, we are able to provide the basic banking services right at the doorstep, whether it is opening of account or delivering of cash, withdrawal of cash, or providing various government-based services. So adding more services to that in terms of providing them credit can play a very, very important role. And possibly there, both NBFCs can, banks come together in terms of providing the credit products. NBFCs, what we have seen by and large, have more appetite for the segment of customers when it comes to the low value credit. So that way, we can become a sole distribution partner. And with the kind of network what we have is that we've already created the distribution rails. The cost of credit delivery can come down substantially by that.
That's a very good.
Happen just with the kind of cash-based economy which is prevailing. So if we provide them with some sort of credit, I think if creditization can precede digitization, that can help in terms of promoting digitization and more importantly, moving towards financial inclusion, because credit can be a big booster for financial inclusion, apart from the subsidies that are currently coming through bank accounts. And what can really change the whole dynamics is that taking these DBT subsidies as surrogate, can we provide them with some sort of nano credit facilities? And that is where probably these kind of large distribution networks can come into play.
Oh, thank you. Having said that, having discussed this, how can we kickstart this process? Who can take the initiative to kickstart
Okay,
this?
so having said that, we've already started. In fact, last year, we've started this program of tying up with banks and NBFCs. We have tied up with a couple of affordable housing finance NBFCs. So last year, we've almost disbursed close to 50 odd crore value of loans. And we've started this year a new program called Fincluation. That's Innovation for Financial Inclusion. And recently, Ministry of Communication, Mr. Ashwini Vaishnaw, inaugurated that. And as a part of that, we are calling all those interested fintechs to come and create this platform which can move towards creditization, this program of creditization of rural markets.
That's a great takeaway for all the startups over here. You can convey the message. This is going to be, the size is going to be huge and the volume is going to be really huge and the reach is going to be fantastic. Okay, right. And now we have, thank you very much for this. We have George with us, who is a very senior executive, senior vice president of ISA Small Finance Bank. He has experience having worked in microfinance institution, being a bank, and also lending to the small segments. He has also experience in working with some startups. Can you just elaborate on some of your views, how this relationship can be, anyhow this is going to be there, how it can be further strengthened, and if you have some inputs to be given to the startups based on the experience that you already have, it will be good takeaways for them.
Yeah, thank you, Mr. Ajayan and Kerala Startup Mission for inviting us. The topics which given to us very interesting are very close to my heart, financial inclusion, and creating an ecosystem with the collaboration of banks and fintech. When we talk about financial inclusion, basically we talk about opening an account, that's or a DBT. That's all will end up. But we moving a further step when we talk about financial inclusion. It will be go for a wealth management or credit. What my co-partners talking about credit, and payments, and moreover, it should be a credit plus services. Okay, so when this all comes together, only then the financial inclusion will happen. And I strongly believe that whether it's a bank or NBFCs, the collaboration with the fintech is always an advantage for the last mile connection. We all talk about last mile connection. We talk about financial inclusions. One person or one institution can't reach everywhere. Okay, so having a partnership with fintech is really going to, I said, distract the financial sector collaborations. We have a lot of experience. I think we are maybe a first bank to have a branch open in remote locations managed by a BC, business correspondents. Okay, they use our technology, but they manage everything. So what I was telling is that it's more on collaborations. That will help us to leverage the strength of each other and search or to reach out the last miles. So when I'm looking on the benefits, before I move into how we can collaborate, some of the benefits which I see is that when compared to a bank, for an institution opening a branch, it takes a lot of time. You need a license from the RBI. But for a fintech companies, they can open a small centers much faster. Okay, when a bank took 3 months for opening a branch, they need 3 days to, maybe less than 3 weeks to open a customer service center where the technology can co-create to reach out, not only sourcing the accounts, for the loans and insurance or whatever we can do that. And for the fintech, they are getting a platform for a growth, because they are backed by a regulated bank. When they tie with a fintech, with a bank, so the fintech can also grow faster, and they can also increase their valuation also. So these are the things which I look in now. And second, and third thing is that the cost for the bank, the cost for the fintech will be lesser when they collaborate together to reach the financial inclusion part. So when you're looking on the collaboration, how we can collaborate with fintechs and the institutions, the Reserve Bank of India came with very clear guidelines on business correspondence model. Okay, so fintechs can be onboarded as a business correspondents, and even they can manage a branch of a bank. As I mentioned, we are doing in 2 locations in Chhattisgarh. I think we have put only just one bank person as an on-site supervisor. Otherwise, everything is managed by the business correspondents. So that's the one area where we can collaborate. And second is on the fintechs can come with different business model, process, procedures, and many people talking about data analysis, so that accordingly the product of the bank can be reshaped or reworked and offered to the fintech companies. And at the same time, bank can set up development portals where the Stangbox where can be utilized for testing the applications and a pure proof of concept model, and then we can take it up also. And next one is that a fintech, they can spend time with such conference or meeting with the financial institutions, understand the statement of problem, and then they can develop it. We know that the India stack, where the Aadhaar, bring a lot of revolutions. When we became a bank, we also startup. Now it's a 5-year-old bank. When we started using the India stack, especially on the Aadhaar. We were grown from 1 million customers to 5.5 million customers in 5 years. A business of 2,000 crores jumped to 25,000 crores business, and this was because of the technologies, and the partnership with the business correspondents, and some of the technology partners who came to understand what is the real gap in that. And other 2 areas which we can be more partner is on the call lending and on the payment side. Okay, so I talk about the business correspondent model. I talk about looking into the business models, and third I said on the call lending, and fourth on the payment side. And I go one more step ahead. Bank likes we are thinking about even willing to invest in some of the fintechs, to build up the values and building the entrepreneurship among especially in the Kerala youth. So these are the areas where we can work together. And we already onboarded, 2 years back, we conducted a fintech conclave. We onboarded a few of the fintech companies and we are in the process of adding a few more, basically to reach the last mile. I said when financial inclusion means it's not opening account, it's much more that. We have to be a family banking to them. As Nandakumar sir mentioning, it became a small loan. It became the RBI came with a new guidelines on the household income for the microfinance customers. Now, what else we can do that? So what else of the fintech collaborations with banks or NBFCs or payment banks? What that will really will go to boost our government vision to have a 7 billion market cap business, as well as to reach the last mile.
Okay,
And,
George, one thing.
I add one more, sir.
Yeah.
And even we don't have, even the bank don't have a branches in many of states, but we have BCs are working there. So that's the advantage of tie-up with fintech companies or the business correspondents who can onboard to us.
So you are looking at there's lots of potential in the role of as working as business correspondents or not business correspondents, actually the process of doing that, where fintech can play a very good role using your API and all. Now, can you give some inputs to the startups? What they should be careful about, and what's your experience on which you could not onboard some of the startups? If you have some examples, you can just tell them, so that will be a learning lesson for them also. Yes.
So some of the suggestions I want to share with the fintech or startup companies here. When we called for a fintech conclave program 2 years back, we got around 250, 300 applications all over India. But when you look deep into that, many of those people they're replicating a model which is done by someone else, which skin changing, coloring, and all those things. Okay, and there's no innovation in that. So we spend a lot of time into moving people to outside. So when you think about startups or fintechs, come with some innovative ideas, with the purpose, how we can reach maybe the financial inclusion, or it could be a market supply or whatever may be. So that's the one thing I had to look into it. And secondly, you don't try to do everything yourself. You can still outsource it. When RBI allowing a bank to outsource a bank branch to operate by a BCs or fintech company, why you want to do everything do it yourself? So that because of we have a good experience, I say. We help a startup company to support a straight-through process for our vehicle loans. They are not able to manage the volume in the platform. So more on the security side, I said one is on innovations. You need a real innovations to pitch into this. Second, you need to ensure that you do outsource certain work with the other aspects on hosting your applications or balancing. And third, on the security, cyber security, that will be very, very strong.
Okay, George, thank you very much. So now from all the four, you got to understand their appetite to work with the startups, the areas in which they are prepared to do it. They have shown the potential, and they have also shown the way where you can conduct, which are the touch points where you can go and meet with your products. That's very important, Mr. Venkataramu, because I've seen many of the startups find it difficult to reach to the decision maker. It takes time to meet the different layers in the banking segment. So how can that issues be solved unless you have some verticals or something? Is it possible? Or anybody can answer on that?
Yeah, I think it's very important for banks to have a separate team for this. And more importantly, this can be in the form of a cross-functional team so that the decision-taking process becomes much more easier. And obviously, if it can be at a slightly senior level who can lead this whole initiative, that can help.
Good. Anyone, do you have any startups, have any questions, any clarifications that you are looking for? You have found the opportunities now. Anybody wants to talk? Okay. Now looking at the banking the sector, now we have been talking about the banker and the relationship banker and the fintech. Now the main party, the third party is the customer, because most of the banks don't lend because the customer don't submit papers properly. This is something where fintechs can play a very important role, making the compliances proper, their data submissions proper, and because they don't have time to do all that things. So it's an important role that fintechs can take up, connecting the customers with the banks, and especially finding the reason why the lending is not happening. We have lots of discussions have been happening on this. This is the reason, one of the reasons some bankers, they say. So you have any views on that? Especially educating the customer, making his papers.
Definitely, in my earlier this one also I told, especially the panelists who are sitting here, we are dealing with the very small value customer, micro level customers. Definitely, when I talk about the big banks, the customers are already, they are well enough, educated enough to handle these fintechs and everything. But when it comes to us, it is not that I myself is not able to understand. My staff itself is not able to understand this fintech to be taken to the customers. So here the easiest solution is the fintech also becoming a collaborator with us. As earlier you told, it is not only collaboration, it is a co-creation. When you co-create that with us, it will be very easy to understand my customer requirement, and accordingly you can do it. Most of the fintechs what today we get is, it is done for some big bank, it is done for some big customers, some high value, high net worth individuals only, the fintechs are available. So really the fintech requirement at this, especially the small payment bank, the small finance bank, NBFC or a Grameen bank, our requirement, our customers are totally different. So rather than giving us the ready-made product, co-create with us, and that will be very helpful to the understanding my customer need, and you can easily come along with me, and my customer should enjoy this technology, not that he should be thinking a burden. If I go to the branch, I have to undergo all these technological thing. I am not able to do. Earlier I used to only put my thumb impression or a signature and I used to get the loan. Now I have to do all these mobile giveaway and all. That should not be there. He should enjoy my technology. By sitting in the house, he should like playing a game on the mobile. He should be able to apply for his loans or apply for his requirements. That kind of technology definitely is required, and definitely that can be built. It is not that today's with the technology and other things, if these fintechs are co-creating with us, it is going to happen. Then finally, one more point, the opportunities when I spoke, all of us who are sitting here, we are at the less regulated entities compared to the bigger banks. All big banks are in Basel III norms. RRB are still at a Basel I norm. Other banks are in a different regulatory norms. So slowly RBI is increasing these regulatory requirements. One fine day we are going to be asked to be along with all the big banks. So in this area, in this niche, lot of work is required to be done by the fintechs, because I was just earlier side, I was visiting one of the fintech where he was telling the compliance and all. Those compliance aspects may not be applicable now because they are not suitable as of today. So our requirement may be different. Once the RBI increases our requirement, the entire opportunity is very wide open in this area. So fintechs can work on those areas also.
Okay, thank you very much. Money, either you look it as you can look it as investor or funding the startups, is it, or financing the startups? How is any that's a very crucial area. Can have somebody briefly describe on that? I have seen very few banks have that schemes of lending to startups and all.
Definitely, the startups may not be looking millions of rupees when they start. Definitely, we may not be able to lend in that scale, but definitely we have opportunities for a small startup. Startup need not be only million and unicorn when they start. It becomes unicorn when they start with the small things. So we have definitely, we have the good schemes, the Mudra scheme. Up to 10 lakh, nothing we ask, only we depend on their this one. And definitely anything which can be started with the small things and people, they can start it. So definitely we have a good Mudra scheme which can be lent under that area. We have a Stand Up India scheme, which is again Government of India supported scheme for starting the new ventures. Definitely, especially this scheme is mainly available for women and SC/ST beneficiaries. And apart from that, CGTMSC supported lending is always available. So at the small level, when they start the things, when it is really at the startup level, definitely we can help them. It is not that we cannot help them. Only people may not think that we are not able to give 10-15 crore kind of lending. That may not be there. But at the beginning level, to start your thing, and when you get become a little bigger, like in Mudra we tell Shishu, Kishore and Tarun. Once you cross that Tarun position, you can definitely go to the bigger banks. Or if it is there, we can also continue to support that. So that lending opportunity is still there.
Thank you very much. What's
have-
NBFC's appetite on this? Sir, thank you very much. Yeah.
Yeah, I mean, on the support part, so we have kept aside a budget. We have a budget of 3 crores for startups. So this is for a specific project. This is project-specific funding. And this is till the entire product is taken towards market for commercialization. So from there on, it will be more of a revenue sharing. So which means you will have enough funding to take care of building of the product under the project. And then once you take it to the market, the revenues will automatically flow.
Okay. Do you have any policy in place for that, or do you identify any specific industry or purpose on which startups can work on this?
So it's again quite open. That way we have kept.
Okay.
You know, we have some problem statements. So either startups can come with their own discovery of problem statement and solution.
Okay.
We've also populated a few of them. Okay. So it's more about understanding the problems for the customers and solving that through technology instead of applying the traditional way of consuming technology of involving, you know, high-end vendors and then, you know, not able to really come up with a product which is required by the customers.
Okay. How can they generally come know about this?
So we have this Finculation program. Okay. And that is available on our website also. They can reach out to a specific mail ID.
Okay.
And from there on, the team can take it forward.
Good. That's a good news. You can.
I can also add.
Yeah.
I will also add one thing. The institution with which I am very much associated with, IEM Kozhikode, they have an incubation scheme. And some of the startups the IEM Kozhikode has incubated, they have reached a size of around 100, that size they have reached. Okay. Yeah, $100 million, IEM Kozhikode. They have reached that size of valuation. Okay. So, IEM Kozhikode is incubating almost a dozen startups now. Yeah, and they are incubating, funding that. And from there, the venture capitals take over. So now the opportunities for funding, I don't think it is difficult. Okay. There are many agencies, many institutions who have come forward to support the initiatives.
Okay, thank you. Thank you. Mr. Nandakumar happens to be the member of board of directors of IEM Kozhikode. Also, his information is updated. So we had a discussion on the various areas. Now, there's no doubt that banks are prepared, are willing, looking forward to collaborate, co-create. The words most of them were using, co-create, and so that canvas is already there. They have already specified the areas in which they are looking into it, which are the key areas these institutions, considering their portfolio, they are keen to look into it. And they have also briefly mentioned about the various types of support systems they have, how they can contact the persons, how they can take it forward. So thank you all for very much for giving so much of valuable inputs. There was lots of takeaways, I feel. It was a wonderful discussion. If anyone has one or two questions, they can. Otherwise, we'll stop this with the... I'm really happy to see the kind of positivity and the awareness that's in the banking segment, which was not there 3 to 4 years back. Thank you very much for this.